All right, Nick, can you go on and see if... Oh, how do I keep it? Yeah, but how do I mute myself?
Okay, I am muted. See, I told you. I was just in the process of telling you guys that I was going to have some technical difficulties today. It's just me and technology just don't go hand in hand. So give me a thumbs up if I'm okay. Okay, good. All right, I just want to make sure. Yeah, Tyler and Nick are both laughing at me right now. But hey, I didn't want to. We wanted to do the stream today because what a great day it was. What a great day of trading it was today. Just, I mean, you just couldn't pick this out on your bingo card as far as the V-shaped bottom day out of here. But let's kind of break it down and let's go to the charts. And I'm going to try to see if I can do this here. I'm just going to move myself out of here, and let's take a look at the charts. Let's take a look at the charts. So you can see, did not expect that we were going to have this type of day out of here, man. And, you know, we're going to have to see if it holds. I mean, if you're looking at this, you know, pretty much today within 3 hours, the SPYs dropped 3.9% and we rallied 4.7%. Just incredible, incredible action. I don't think anybody could have predicted this. If you look here, we've had, you know, the last time the SPY has had a gap down to 2% and then closed up 2% or more. It's happened 5 other times. And what's interesting, if you look here, every other time that we've had this type of action, it's been in a bear market. So, I mean, you know, 2008, 2002, we had it twice happen in 2008, once in 2002, and once in the long-term capital debacle back in 97. So, not uncommon to have this happen here. As you know, we are in a bear market. The answer is no, the low is not in. There's a lot of reasons for what we're seeing, and we'll get into that in a minute. But, I mean, look, this is what you get in bear markets. And it kind of reminds me of 2007, 2009 trading where they would just, you know, you'd have to be careful at any point for bear market raids, bull market raids, and such. But you know what? I think we gave you a great clue for how to handle this market and how to recognize that this market was going to continue to drive through. And let's get into those because that's what's really important with this market. First off, let's look at the technicals. You know, I love it when several areas of the market collide at the same time. And if you look here on the monthly chart, we had the 50 moving average, which we talked about was our short-term temporary target. The 50 moving average on the monthly chart, and then we had the 50% retracement of this from the COVID low to the bull market high. So nice area to bounce out of. Guys, we had gone down 6 straight days, okay? 6 straight days. We talked about it on the pre-market show, how, you know, this CPI number was happening in a different environment than the previous CPI, than even non-farm payrolls. You know, we had been down these 6 straight days. So that's something to take into consideration, something to think about. And if you kind of look in here, look at the weekly chart on the SPY, you can see nice hammer candle, nice reversal candle as we dipped through, made new lows on the 200, and then kind of closed back up in high. And if you look at the daily chart, I think it's important kind of expand out this daily chart. So you can see in here, this 362.17 was that June low that we were talking about. And then we kind of had this little top area here in at 358, which was the previous lows. As far as to the downside, I know we're getting a nice little bounce up here. But as far as to the downside, I'm looking at coming up over the next couple weeks, maybe 339, 338.57. This would take us back to the previous COVID destination. So I think we could definitely see that over the next couple weeks, as you know, as far as downside action. Now, in the short term, we did kind of talk about this divergence in RSI, and if we kind of zoom in here a little bit easier, you can see the last time we made these lows, RSI was diverging. It was below 30, close to 25. We never even got below 33 here on this RSI divergence. So we saw a bunch of divergences today that I thought was important to kind of pick up on. So the key is going to be how this market closes and into the afternoon, and then what we see over the next couple days. But definitely from the case of the bear market, or for the bulls, this was not good news for the bulls. And I'd be careful of putting on positions after this long stretch up, because there's a couple things we got after the CPI print. One of them being ECB headlines. The terminal rate came out. Their white paper came out, and a lot of the members were, and they're being criticized for this. They came out with a terminal rate at 2.25, which is much less than what they were kind of pricing in. So I think the market kind of looked at that as a possible pivot, possibly. And we talked about it with you guys. Okay, the Bank of England, and it happened prior to, right? We kind of got this little pop-up prior to CPI that the Bank of England, Andrew Bailey, we talked about it, pretty much was putting trusts and her government in kind of a box, in saying they were not going to extend the loan facility past this Friday. So we're now a day and a half and counting until that will be terminated. And we kind of talked about this yesterday. That was interesting. And if you pull, I'll pull TradingView in here. If you look at the gilts, right? If you look at the gilts, yesterday, nice reversal off the top. And then today we're getting a nice drop down. So what this is saying is they're pretty much believing that that trust is going to do something as far as change and cut, get rid of the budget that they had put out there that caused all this turmoil to begin with. And part of what they came out with was the fact that they are thinking about raising the corporate tax rate, but they've also come out and denied that they're going to do this. They have their finance minister is still over in Washington. He's on his way back. So it's going to be interesting to see what happens here. But I think what you're seeing is a little bit of a relief rally. And we talked about this, guys. You should have been prepared for this. You should have been looking at this, because if you look at the pound, nice strong day. If you look at the gilts, nice fall off. And we talked about that, how that plays into the U.S., okay? This is a connected economy, and you can see we had a nice surge on the 10-year. We're now pulling back. If you look at the 2-year, nice breakout of a bull flag. Now, what I'll notice is the 2-year still kind of holding in here. So I think, you still got to be a little bit careful, because let's face it, what we got was not a clearing event, but a fundamental event where we got increased fundamental news that's going to change the landscape going forward. I mean, this is not good news. There's no reason that you would have a Fed pivot off of this, okay? What you're getting is very oversold reaction, and we told you, follow the 3 horsemen, and that'll really help you. And really, this is the area we told you guys to look at, 355.08. This is the pivot area. If they reclaim this area, they reclaim the 50% retracement off of the move, then that should have been your clue going forward as far as how to trade this market. But if you're looking here, SPY, pushing up pretty nicely, but we are stuck in this area on the 15-minute chart that we kind of talked about. This is that area where we have about 5 or 6 closes. There's a lot of volume. There's a lot of congestion in this area. So I need to see, we got rejected out of this area the first time. We're now back in this area trying to break out. So we'll see if the rally can continue out of that area. And you can kind of see us in here. You can see the pop-up on the gilt news on the Bank of, the Trust Administration, maybe changing the budget. So this was nice here to kind of see that. But at the same time, We did fall off, and you can see nice drop on this CPI report, and we'll get more into that as we look at the ES. But looking at tech, interestingly enough, tech, continued to make new lows, trying to get back above this level, which is this 267.74 level. They're a little bit above it now. They want to hold that level, and then they'll be buttoned up into this trend line, up into the 9 EMA. So either way you shake it, really, really impressive action on what we're seeing. And, if you were on the pre-market show, and I know Bornalam, you kind of, mentioned it as well. Hey, we basically called out the trade to make. I didn't know it was going to bounce like it bounced, but we talked about it. The IWM small caps were the only indice to not break 2022 lows from June, and we are expecting a bounce off that level. And I took 2 trades off of it. Unfortunately, I look like a piker now because of how it traded. But let's go into the ES, and let's go into levels, and let's go into how we traded it, how it should have been traded. Well, just like we talk about all the time, what you do is in these type of events, draw your Fibonacci from the top of the point to the low point. And so what you have is your 50% level. What was interesting, we gave out levels of where we thought the ES would drop down to if it was a bad CPI print. And in that area is highlighted right here. And we were kind of really spot on as far as the initial reaction coming down to this area. So we had a nice, I did make some money in here. I don't recommend trading this. It gets very whippy. But you could have jumped onto the train and got off at this station right in here. And then, what was interesting in this was, we had a couple other divergences with the VIX and stuff like that, which we'll get into. And I got some theories on that. But you can kind of see we kind of traded around off of this level, and the bears just could not. They didn't have the strength to really take us down. And once we got back up above VWAP, we really, butted our heads into this 50% retracement level, butted again for the second time. And then once we took off and flagged here, this was your opportunity to buy. And this is why we set these levels. I mean, our levels worked out great today. We had good levels here. The 50% level gave you a good clue. Nice bounce up through. You got some wicks. And now we're back up to 3670. 3700 is kind of what I was thinking was going to be our lid, when I was kind of looking at this action. I never, in a million years, I couldn't have, I would have never thought that we would get to 3700 today. But, this is why being a trader, you're in a bear market, guys. You're in a bear market. And so you need to understand how that market works. And you got to understand, you got to have your head on a swivel because, let's face it. Everybody, even I was in the morning when this drop happened, I was like, well, maybe we get that capitulation. Maybe we get the breakdown and we get circuit breakers to halt. But just, it didn't happen. And, when the bears kind of, couldn't push the envelope, the bulls got control. And I told you, be careful because, watch the internals and what we were talking about. We gave you a bunch of stop signs to kind of watch for. And they really played out well. Because of what's going on in the Bank of England, I think that's kind of helping us a little bit. You got the response from the gilts coming down. That's pulling our rates back down. With it, bonds they're starting to buy up some bonds. So I think, look, good action if you're able to trade this. Nice action. If you look at the IWM, you can see this was the 2022 low. This is what we said. Look, buy off this. I bought off right in here. I caught a nice 10-point move in the ES. I did buy this one as well and caught a nice little move up into here. So, we gave you this as action to possibly buy. So, you had at least you had a good trade bottom and a good trade pieces that we gave you to buy off of. I just wish we knew it was going to just continue and just blow. But what you got to understand, and we talked about this before, if you're short okay, if you're short, typically there's a lot of buy stops sitting all through here, okay? Because if you took yourself short and you had some nice calls, nice puts going into this number, okay, well, different traders have different levels for where they're setting their buy stops. And so what happens is once your profits start getting away from you, then you start buying to cover your shorts. And then, of course, once they get going, more people buy to cover the shorts. And then you got people coming in. I was watching traders all morning trying to shorten here, trying to shorten here, trying to short. I can guarantee you a lot of people, a lot of short funds getting blown up today. And so that just fuels itself. But what's interesting is I think it's more of an index-fueled short squeeze, because if you look at a lot of the highest level shorted stocks, you're not really seeing a squeeze out of those stocks, going forward. So, I think you're just, eventually you're going to see this action kind of reverse and kind of go, maybe a different way. But this can keep on going as people constantly are trying to reshort these areas. So just follow your levels, understand what that means. And the VIX, and we talked about this. I mean, I can show you areas into news events. Now, what you got to understand about the VIX, okay? The VIX is a sell the news indicator, which means that when you don't see the VIX pop up on a news event, that tells you one of two things. One is it tells you that this is news that was already priced in. It was kind of expected. Everybody was already positioned to the short side for this report. And it kind of tells you as well that, maybe there's going to be a period of covering. But, if I'm looking in here, you can see, and you can see my arrow. Typically, if there's a bad news report and it's not expected, you see these spikes up and then they kind of close it down. Spike up and then they close it down. Spike up and then they close it down. Here, no spike up. We've been in this elevated territory for a little bit now, and we talked about every single rally has come out of the VIX from the 35 to 38 area. So now with us kind of falling off in here, I think this gives us a little bit of action to the upside, and that's what we're kind of getting in here. But still, still elevated for me. To me, to see a sustained rally, I need to see us down by, right around 30. But be careful. The market can really do whatever it wants to do. And if you followed the three horsemen, which is what has really kept us afloat for a pretty good time, you have the dollar. And if you look at the dollar, what's interesting to me about the dollar, we showed you where the pound was kind of rising, the euro's kind of rising. And so naturally the dollar is a functioning of, it's a function of how it functions against a basket of currencies. So this is going to have a tendency to naturally fall. We kind of talked about that today. Be careful of that. And so that's what we're getting. So you had a nice little pop-up, almost got up to 314. And so if this falls off from here, you got to be careful, because maybe now what we're seeing is a lower high being made. And so maybe this fall off, if we do make a lower low, then this could maybe be the start of something, because the dollar has been really one of the things that has been kind of holding back a lot of companies in earnings, along obviously with inflation. So if the dollar's going to pull off, that's going to be bullish for equities from that standpoint. The 10-year pushed above 4, got almost to 4, almost up to 4.1% there, as you can see. Nice little topping tail in here, but still elevated, still holding in above the 9 EMA, still in an active sequence to the upside. So I'm not ready to say, hey, is the dollar going to kind of, just fall off? But again, another RSI divergence that you're seeing in here. And if you look at it, you can see back when, we made the last time we came up to almost 4% here, you were extremely in the red. Now, didn't even break over 75 in there. So Maybe a little bit of a divergence in RSI could definitely be signaling something that could maybe be a little longer extended. 30-year, you can see yield curve still increasing. 30-year kind of falling off in here. And so that's something to kind of look at. So you got some things to look at, and again, ARC it's just barely positive. I mean, if we pull up our sector report, and I did put this in before I kind of stopped trading. I took a screenshot of all the sectors that were green in here from the opening print, and it was pretty impressive. I mean, you can see semiconductors up 8% almost, ARC up 6.5. Financials 6%, uranium, energy, EV, consumer staples, building, and materials. You got everything pretty much running to the upside rating here. So it's definitely something to. It's a broad-based rally. They're pretty much buying everything up. So you don't want to fight the tape. We say this all the time. You can have your opinions of what's going on in the marketplace, but you don't want to fight the tape. So, if we pull up the the ES, let's pull up the 2-minute chart in here. I mean, breaking out the new highs. Again, 3,700 is kind of the level I think that we get tapped out in here today. I'd be surprised if we get past that. I expect maybe a little bit of pullback in here. As this is a major point of control. So, we're going to have to see, how far they're going to be able to take this rally here as people are getting buy-stopped out on their shorts and the algo's really pressing. If you looked at the order flow, we saw a lot of big prints show in the morning. We saw a lot of big prints down in here, which kind of gave you a clue, too. It was a very odd shape to the market from a liquidity standpoint. And what kind of caused this drop? We talked about CPI. I mean, look, core CPI 0.4 versus 0.2, which was expected. Headline 8.2 to 8.1. I'm sorry, the headline was 0.4, core was 0.6, and they were expecting 0.4. So definitely the headline and the core both missing pretty good. And if you break down if you break down the components, it's not hard to see, that where it was as far as, you got the food component still strong, 0.8% up. You got shelter still strong, 0.7% up. You got energy services, 1.1% up. You have, services less, what really shocked me was services, outside of energy was 0.8% up. And on the downside was energy 2.1, fueled by gas falling almost 5%. And what this brings us, another interesting thing that this brings us to is the fact that October's CPI, which will come out in November, is really poised to go up dramatically, okay? Because we've talked about the gasoline. We've talked about gasoline gone up, 21 out of the last 22 days. So the energy component, which fluctuates pretty good, is going to put a good crimp into CPI. So be careful because we're definitely going to be looking for a much higher CPI print coming in October, at least initial gauges of what we're seeing in the components, because we are, basically into the middle of October now, and we can measure that stuff. So just interesting day as far as the market's concerned. And, we still have PCE coming up October 28th, but given what PPI was, given the unemployment report, given ISM, what ISM said, given what we saw in CPI, it's pretty much a given. I mean, PCE is going to be nothing. I mean, we know it's going to be bad. The Fed knows it's going to be bad, and it's pretty much not going to play into anything. So expect the Fed governors to be coming out here all, maybe tomorrow, all into next week, beating us down. because the Fed blackout period. So the Fed blackout period uh, does not end. It doesn't start until October 22nd. Okay, so you're gonna until all next week going into OPEX. You're gonna pretty much get Fed governors talking this market down. So, again, I don't know. To me, they kind of go in one ear, out the other. But it's definitely something that, we're going to have. We're jumping into earnings, going to get into that in a minute. But, I mean, look, Mark, I know you said it's a huge clearing event, CPI bad, but I wouldn't say it's super alarming. Inflation in itself is alarming. And so the fact that we are sitting with such a consistency of bad prints. I mean, core CPI has gone up 28 straight months. Okay, and the last time we had inflation of this ilk, Volcker, it took 2 recessions for Volcker to get inflation under control. Okay, so, high rates are not going anywhere anytime soon. They're at a 40-year high. Europe's enduring an energy crisis. We're heading into a global recession. And you got China still now filtering around with what they got in lockdowns and stuff like that. And we've yet to see earnings really react. We've yet to see, look, these earnings estimates that we're getting through on this quarter that just started this week with PepsiCo, okay, the earnings estimates have come down from a 6% growth to about a 3 or 9% growth to about 3% growth. So they've come down pretty good, but they've yet to come down. If you look at it historically, the PE, forward-looking PE in a bottom of a bear market with the economy going into a recession, that right now we're at 17, and typically there's not been one bear market that has not bottomed and turned around until that forward-looking PE got down to 12. Okay, so we are a long way away from saying that we're at any type of crisis averted, bottoms in, time to go long into our long-term account, stuff like that. Now, I will say we have nibbled a little bit, okay, but still sit in the majority in cash as far as our fund's concerned. And, we're still holding off. And there's a lot of institutions still holding off. And as long as you got that dry powder still sitting on the sidelines, because we're not the only ones that see that looks at all this stuff, right? In inflation, it's tough, man. It's tough. It's a tough thing to fix, and it's a tough thing to fix when you got really the political landscape the way it is that's kind of causing and getting in its own way. So energy is a big part of what we're dealing with in inflation this year. And the problem is the reaction to what's going on over in Ukraine and Russia. While I 1,000% support it, okay, I feel like they should have done a little bit more. And I feel like really they should have, because the sanctions, and they're talking about sanctioning aluminum, is only hurting us. The semiconductor sanctions that they're doing that go against China, hurting us. And again, I support a lot of that stuff, but right place, right time. And when you're sitting on about $32 trillion of debt at high interest, that's not something that, I really, think is very smart. And we're trying to force this clean energy and, without having available alternative sources or a transition. I think that this is going to only get worse and extended. So, look, that's, we can think all we want. The question is what's going to happen, how our market's going to respond to it. To me, that's the real key. And so what I'm looking at going forward, okay, and we're kind of getting this nice little rejection that we talked about, this point of control at 36.87. You want to see, actually, if we can get a little drop down into 36.70, it might be a nice little bounce area for me. So I might line up some orders right here to see if we can get a little drop into here. But again, what we're going to want to look at is what happens. We had the dip buyers come in. What happens going into the close? What happens going into tomorrow? We do have retail sales and consumer sentiment. Not really, I don't think they're going to be game changers, but it's something that you're going to want to look at, especially in inflation expectations, as the Fed always looks at. But, looking forward, really look at the semiconductor index. So what I love, you guys had the perfect, right? I'm surprised I didn't see this. I heard Kramer came out today and said, don't buy semis. They're going to go down another 30 to 40%. I don't know if that's true, but that's what I saw. That's what I saw as far as on Twitter and stuff. I don't know if that's true, but if it is true, you had the perfect opportunity to buy semis at the bottom. Look at it. Even with this nice little run up, and it's 3.3%, right? But we're up 7% from the open. So you have a nice 7% run in from the lows here in semis, and you're still not back up technically sound, right? You're still not back above this 189 level, which I feel you really got to get back above. So, just be careful with that. It's a nice little run. Look at AMD, nice big green engulfing candle after yesterday, inside days all over the place. NVIDIA, look, you could have bought NVIDIA in here if you bought the 15-minute high and took 11 points off NVIDIA. Who thought, I didn't trade it. Who thought that you could have took 11 points off NVIDIA today? Especially when you had AMAT come out and pre-warn. So, but that also brings up another thing. What you want to start looking at, guys, is what you want to start looking at is, what happens to the bad news? Does it get bought up? Okay, so AMAT, yeah, maybe it's getting caught up in the overall market, but this was gapping down pretty good because of a pre-warning, based off of what's going on with China. Pretty decent company, and, it was getting hit, and they bought it up today. So I want to see, does AMAT hold, right? Do they hold that bad news? Pepsi came out with really good earnings. We've been in this for 2 days now. We're still in this trade from yesterday. And if you kind of look here, nice reaction to earnings. They blew through, yesterday kind of fought with the 200 here. And then today they blew through that and blew through the 50 all in one sitting with one big candle. So do they hold that? We had Walgreens Boots Alliance come out with some decent earnings. Okay, nice buy up in that, though I actually took, believe it or not, I took a 10-cent or 15-cent loss in that thing today. But we won't talk about that. Delta Airlines came out with okay earnings, okay, kind of buying it up. What about TSM? TSM, again, Taiwan Semiconductor came out with earnings, and, they're getting bought up in here. So that's what you want to watch to and kind of follow to see, because this week you're starting to get information, and you should be making yourself a log for what's going on with earnings, okay? You should make yourself a log and see how they're reacting to different earnings plays. How are they reacting the week before the earnings? How are they reacting going into earnings? Our play that we traded yesterday and today, which I kept on saying I was done, but I had to go into this one, was JP Morgan. We always buy the banks going up into earnings, okay? And we had a nice little trade in it yesterday. Nice trade in it today. Unfortunately, I'm still in a small portion, which is, a tenth of our position. Hold on one sec. But, we took this trade this morning. And we took this trade right out of here. We got 2 points on this trade, and I was very happy. But, look, it wound up going like 6 points, 7 points. So, you call me a piker today. Though I did leave a trailer on, so still kind of sitting in this a little bit. It's definitely helping the return, but it would have been better if I left my whole position in. But who the F would have knew they were going to have such just a drive day out of here? So financial strong, and going into tomorrow, we have the banks, right? We have J.P. Morgan. Now, I wouldn't hold these going into earnings because they typically react horrible into earnings. Look at Morgan Stanley here. They have earnings. Look at Goldman Sachs. Nice big bar. They're buying the heck out of Goldman Sachs. We also have Citigroup that has earnings. You have Wells Fargo has earnings tomorrow. USB has earnings. Nice, just big bars, big candles all around. You also have United Health Care that has earnings, and I think is a pretty decent stock to kind of watch going into there. You also had Fastenal that had earnings and got dropped down pretty good here, and looking to buying this up. So and I personally don't think that's too good of a company, but they're actually buying it up. So that's all kind of information for you going forward. As far as we got out of, oh, by the way, we did get out of our Costco short today. Right down here as the head and shoulders pattern right up here for the puts. We're doing pretty good, and the IV was up pretty good into the morning, and so we just sold out as we kind of hit our range. So we finally got out of that long-term position. Nice trade in on the Costco short. You also had a nice trade into DWAC today, which I personally didn't trade, and I personally didn't think it would hold. I mean, typically you have these type of days going in where there's a huge negative event that people just don't feel like taking risk on to the upside. But just great trade out of the whole DWAC. Got halted up at the top. Would have been great if you could caught a short up here. I know some traders on our desk caught shorts at 21.50, and they covered down into this, and I think some of them are still sitting in shorts. So DWAC was popping up on news about Google listing the Truth Social network in their store. You also had positive news, a huge volume bar on Twitter. Twitter came out and said, okay, yeah, it looks like we're going to close the deal. So they're getting positive indications from Musk that they're going to be closing this deal. And so I think that's, good information, good news. And, they kind of got some action into that. We're also sitting in KHC from yesterday, guys. I mean, KHC, nice rally out of the bottom in here. We had some nice 3 days of volume. It is declining volume, including today's volume, but we're getting a nice little kicker into a second day. So we'll probably close out this position into the close, and we'll see how that goes. So you had, the Kroger. I don't know if you saw the Kroger ACI Albertsons buyout rumor that supposedly is going to happen, and the price is holding, so it looks like it is going to happen. So nice big bar, 12% almost on ACI. We traded that one in the past. Kroger kind of mixed on the reaction to the news. And I know Michael S., you pretty much have, Michael S. was kind of trading our Kroger in the middle of the week. We also had this INMD trade that kind of ran up into the 200. Huge volume in here. It's up 13-14%. But I'd be shorting it at this point, or not. I wouldn't be buying it now because it's kind of bumping up into its 200, and I think the trade's kind of over. But you had we traded this stock in the past. It's been a while, but getting a nice little volume bar run up into the 200 with the 50 as support in there. So you had some really good plays today, really good stuff. So if you took it, great. If you didn't, trust me, there's a lot of traders caught on the wrong side of this action today. If anybody tells you differently, they're lying, because there's no way you could have predicted this type of action. I mean, I kind of talked about it. I mean, you don't see the Dow do what the Dow did. The YM is the mini Dow futures, okay? I mean, you don't see the Dow basically fall 1,000 points and then go back up 1,400 points. This is unheard of. This is the sign of a broken market, guys. I mean, be careful. Things are broken. Look what's going on over in the UK, and to see the Dow do this is just, I mean, it's just, the day's incredible to me. And, I've been off the desk most of the day because we made all our money pre-market in the ES. So, what do we do going forward? That's the key. Going forward, I mean, look, you're still seeing the 10-year fall off, but really, it's kind of falling off from an elevated news event drive up. We kind of expected it. It's still holding in here. So for me, I need to see the 10-year fall back down to 3.6 for an extended rally. Okay, so we're still going to be looking at that. I still think you got some stress risk going into tomorrow and going into tonight with what we got going on with the Bank of England. So I think you're going to, you still got some stress risk there. But you're going to look at the 10-year, watch the dollar. I think, again, I think the dollar is going to continue to fall off. And, if it does, I think that's going to be positive for equity. So, but the question is, how far does the dollar fall? Does it break 110? That's important to me because then it makes a lower low. And then maybe this pattern of higher highs, lower lows is kind of broken in here. So that would be definitely very bullish as far as that's concerned. So I'm watching that. Watch the VIX, okay? The VIX is something, it's still elevated. It's still above 30. So with the VIX still elevated, kind of popping up a little bit in here, it just definitely something to notice. And I think we saw, the VVX and the VIX kind of, diverge a little bit. And I think there were some things that were going on that you might say that there's dislocation a little bit. So what we want to look at is just, watch your stocks that are having earnings. Watch the close. I mean, if we look at the ES here, and let me pull up the 2-minute chart here. By the way, the trade worked. I hate to say it. What did I tell you guys? Buy the bounce off of here, and you would have got yourself 8 points, 10 points. Okay? So I just gave you a trade on the show, and that's why we do this shit. Not for you to give you trades, but this is just fun to talk about. I mean, look, this, if you look at the ES, nice trade opportunities in here off of Friday's low. The double thick lines is the important lines because I got a lot of lines laying over top of the chart. These are the important lines. That's why you get the big bounces or the bounces off this. So, for me, going forward, if we come back up here, we break and we get up into the 3,700 area, I think that's definitely bullish, something to take note of. If we lose 3670 in here, if we break this level in here, and then the next level of importance to me, I know we got the June low, but this is like right in here. So this area is the next level of importance. So we want to see us get up to 3,700 if we're bullish. We want to hold above this 3670. We want to hold above this area. If we were to break both of these areas going into the afternoon, then obviously, you're breaking, pretty much the area where, you fell from on the news event. If we fall back into this area, then that's definitely, the bulls have lost some steam. But if you look in here, volume has pretty much just dried up in here as far as that's concerned. And looks like we kind of want to roll over. So we'll be watching this going into the close. But just be careful. It's, you have the Fed funds futures have repriced dramatically based off of the new CPI news. You have the terminal rate going up to 4.89% now. So that's something to kind of think of. It's just, you had a nice little V-shaped trade today. Let's see if we get some more follow through. And you have IV basically melt, and a lot of this too is you have a lot of, implied volatility melting off after a huge, huge 2 weeks of events. I mean, if we go back to the VIX here, and by the way, we didn't talk about Bitcoin because Bitcoin's not worth talking about. Though you do have, I will say, you do have a nice little hammer candle where if you do get above 20,000, I think maybe that's tradable, but not for me. But, don't forget, we came off non-farm payrolls. We came off of CPI. We came off PPI. These were major, major news events going into the November 3rd Fed meeting. So, a lot now that we've gotten through those hurdles, we've gotten through those events. Now you have, just like you had positioning going into the CPI, now you got institutions, vol dealers, now repositioning themselves for lower volatility because really what's left after those major, major headlines. So I think that's a lot of what's going on here. In addition to, going back to the ES, all these buy stops being triggered off once we just blew through all these levels. So look and see how it closes, see if there's some volume to it, and then just be safe out there. And, it's, I think we're, it's a bear market, man. And this is why you need to really be, you really need to be flexible, okay? And you can't buy into your own thesis. I mean, you could think, hey, okay, maybe this is a limit down day, but if they don't bust through even the lows and they can't get any muster and they're back above VWAP and then they break back above the 50% retracement level, well, you can't be thinking we're going to have a limit down day, okay? If you looked at the, the other internals, if you look at the tick, okay, the tick, was giving us, it was giving us some, and let me kind of focus in on today. I mean, look what the tick did today. And let me kind of change this here because I don't like to look at that here. But if you look at the tick today, and we just zoom into today, you can kind of see. I mean, look, we had extreme tick levels again, extreme tick levels down here, but then, by the time we got to 11 o'clock, we were flipping to extreme levels on the tick to the positive side, and we had higher lows. I mean, we really haven't seen ticks back down in this area since the, since the early morning hours, really. So, you had a little burst at 12 o'clock, but that's about it. So, when you see this action, that tells you don't fight this right now. It doesn't matter what your thought process is, don't fight it. And if you look at the vol D, I mean, again, once we crossed above the zero line at, around 11:10, okay? And, not bad action, not like it's extreme action. I think it's a 75% up day. But at 11:10 is exactly when we were breaking the 50% retracement level. So that gives you a good clue, a good idea. Hey, this is something that possibly could stick. And then they just kept on blowing through each level. So the key is what I'm looking at. I'm watching these levels, see if we pierce the level, this 3670. If not, we hold, then maybe we get, we pierce through the 3686, and I think we go up to 3700. But if not, if we fall down, just look and see, how well these levels hold, how the stocks trade around it, and you can make yourself some money going into the afternoon. So that's it for me, guys. Yeah, Tyler, he had a baby appointment. Go check, make sure I don't know if you guys know it, but Tyler's having his second baby. So well done him. And so he had a baby appointment, so he's going to do his thing. And Nick is traveling overseas. So anyhow, I think that's about it. And I appreciate you guys hanging out, and safe trading, and I'll see you in Discord.